In Q3 2025, the Swedish pharmaceutical company Orexo displayed advancements in R&D and entered a strategic partnership while facing some financial and market headwinds. Financial performance. Total net revenues came in lower at 118.7 million Swedish kroner from 136.5 million Swedish kroner in the third quarter of 2024. The primary factors were largely associated with the performance of U.S. commercial, currency impact, weakening U.S. dollar, reduced revenues by 10.9 million Swedish kroner, nearly 10%. Some demand pressure, a 7% decline year-over-year, primarily from previously exclusive contracts with United Health Group and Humana inventory destocking impacted negatively comparing previous quarter. Wholesalers reduced Zubsolv inventory by 30% from Q2 to Q3, ending 60% below year start levels. Critically, underlying demand remained stable. Sales from wholesalers to pharmacies declined just 1% year-over-year, and quarter-over-quarter demand was essentially flat. EBITDA of negative 9.8 million Swedish kroner included 12.9 million Swedish kroner in provisions for social security fees related to long-term incentive programs triggered by the surge in share price. CEO Nikolaj Sørensen emphasized during the earnings call that without these non-cash provisions, EBITDA would have been positive at approximately 3 million Swedish kroner. The company maintained full-year 2025 guidance, among others including Zubsolv sales of $50 to $55 million and positive EBITDA, foremost driven by Q4 inventory rebuilding, which follow historical seasonal patterns. Core business, Zubsolv's quiet resilience. Despite headline weakness, underlying Zubsolv fundamentals remain solid. The buprenorphine/naloxone market grew 4% year-over-year, now driven primarily by commercial insurance, about to surpass Medicaid as the largest segment. This shift favors Orexo because commercial patients generate significantly higher net revenues, lower rebates. Orexo maintains 99% coverage of commercial segment, extending into 2026 with no rebate changes. Most competitors focus on Medicaid, where Orexo's coverage is lower at 48%. The inventory situation follows historical patterns. Wholesaler inventory peaks at year-end, drops to lows in Q3, rebuilds in fourth quarter. Current levels are at historical lows, supporting the expected fourth quarter rebound. The game changer, Amorph OX technology validation, GLP-1 breakthrough. Opens massive market, OX472. Preclinical studies demonstrated that intranasal semaglutide formulations using Amorph OX achieved up to 7 times higher plasma concentrations than oral Rybelsus, with notably lower variation between subjects. This breakthrough opens doors to one of pharma's fast-growing markets, GLP-1 agonists for diabetes, obesity, Alzheimer's, Parkinson's, and addiction. Sørensen described a two-legged opportunity. Leg 1. Semaglutide product. Despite tremendous promise, branded semaglutide API patents don't expire until the early 2030s, creating a longer timeline. Leg 2. Technology partnering. Multiple pharma companies developing GLP-1 peptides lack effective oral nasal formulations. This path could materialize much faster. The intranasal approach offers compelling advantages versus injections: needle-free, no refrigeration needed, stable 6 months at 40 degrees Celsius. Versus oral tablets, 7 times better bioavailability, more consistent plasma levels, bypasses destructive first-pass metabolism. Management indicated costs to reach human trials are not that high, and having internal manufacturing means they can move relatively fast. The strategic question is when to partner. Completing first-in-human studies would be a major value inflection point commanding better terms. BARDA partnership for OX390 valued up to $51 million. Orexo's U.S. subsidiary was awarded 75 million Swedish kroner, $8 million, initially by BARDA for developing OX390, an intranasal rescue medication for adulterated opioid overdoses, with total potential value of 480 million Swedish kroner, $50,900,000 US. Why this matters. Chief Medical Officer Dr. Ed Kim explained that xylazine fentanyl mixtures are now found in all 50 states, with xylazine prevalence quadrupling over 3 years. Animal studies show xylazine increases fentanyl lethality by over 100 times, and current naloxone medications don't address xylazine-induced respiratory depression. OX390 will be first in class, specifically targeting toxic effects of xylazine and similar alpha-2 agonists. The financial structure. The initial $8 million covers expenses through the first half of 2027. BARDA reimburses project costs including internal staff salaries, providing financial support for existing personnel. The award begins positively impacting EBITDA in Q4. Crucially, upon FDA approval, Orexo retains all commercial rights. Beyond funding, BARDA provides technical expertise and can help navigate optimal regulatory pathways, potentially including priority review vouchers. Pipeline. Strategic patients on OX640. Izipry progressing. Izipry, high-dose naloxone, continues on track with commercial-scale manufacturing initiated and stability studies beginning Q4, summer 2026. NDA submission timeline remains unchanged. Sorensen emphasized that approval carries strategic value beyond immediate commercialization. Having an approved amorph OX product provides regulatory precedent that significantly helps other pipeline approvals. OX640, epinephrine for anaphylaxis, made technical progress with first commercial-scale batches manufactured, but partnership discussions have slowed following a generic filing against competitor ARS Pharmaceuticals Neffy. Sorensen was candid about the strategic calculus. Current partnership offers may not reflect OX640's full value. Rather than accept underwhelming terms, Orexo is conducting Q4 market research to validate differentiating parameters while monitoring how Neffy performs. The bull case remains intact. Major investors just poured $250 million into ARS Pharmaceuticals' launch, and all Wall Street analysts rated a buy. Sorensen drew parallels to naloxone, where initial physician hesitance delayed adoption 18 months before nasal delivery became widely accepted. With patents until 2044 and strong competitive positioning, management appears willing to wait for better terms. Resource allocation and growing investor interest. Cash stood at 105,600,000 Swedish kroner, with net debt of negative 366,700,000 Swedish kroner. The BARDA funding is particularly significant by covering OX390 development costs, including internal salaries. It frees resources to advance GLP-1 and OX640 programs. Sorensen got a questions whether the company has noticed any increased interest from investors post the GLP-1 announcement. According to Sorensen, significantly increased block trades managed by international banks. International investors often held through custodian banks, not showing, in disclosed ownership. Increased inbound requests from international investors. 3 strategic buckets for value creation management outlined a clear framework. Bucket 1, commercial assets. Optimize Zubsolv value, plus royalty streams from Abstral and Edluar. Izipry moves to semi-commercial status with go-to-market strategy to be determined. Bucket 2, proprietary pipeline. 3 active programs. OX390, OX472/G, LP1, OX640, where Orexo controls development and commercial rights. BARDA funding reduces OX390 financial risk, while human data will be the value inflection point for OX472. Bucket 3, amorph OX. Partnering. Become the partner of choice in nasal powder delivery technology by applying amorph OX to other companies' APIs, particularly large molecules like peptides, proteins, and vaccines. Multiple undisclosed partnerships testing the technology. The bottom line Orexo's Q3 results reflect a company navigating a challenging transition. Revenue headwinds from currency, Inventory dynamics and modest demand pressure create near-term noise that obscures meaningful progress, validating a technology platform with potentially transformative applications. The GLP-1 data and BARDA partnership aren't just press releases, they're concrete proof that Amorph-OX works across different molecule types and therapeutic areas. Seven-fold bioavailability improvement for semaglutide and $51 million government validation for OX390 suggest the platform's value extends far beyond opioid use disorder.